Good afternoon, everyone, and welcome to the Daily Volatility Box Report for December 11th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's activity, we'll start by reviewing crude oil, which had Inventories Report come out today. So before we actually look at even the charts, let's take a look to see that crude oil ended basically unchanged for the day. However, this didn't really capture the true volatility that crude had. So we'll start by reviewing the plan that we have in our trade plan for all of our members who are trading the inventories reports, which is we start looking at 4 a.m. onwards to see whether or not crude is respecting the aggressive volatility box. In this case, crude was respecting the aggressive volatility box. And even in that first hour test, we didn't breach either side's aggressive volatility box entry lines, giving us the notion that it's okay to play crude a little bit more aggressively for those who are looking to trade more aggressively. Now, we had our entry come as crude fell into our volatility box, and unfortunately, we were stopped at almost to a tick. Our stop was 30 cents outside of our volatility box, and we were taken out before crude then ended up making a move back up to hit what would have been both our T1 and our T2. So this was one where crude was just a stop out for us. But now if we try and take away some lessons from it, we've talked about this plenty of times, is how if you're being a bit more aggressive to use these candles as your confirmation. And if we had used that, then our entry would have actually come as we went from red to orange to yellow, yellow being the first one giving you a sign of some sort of bullish trajectory. And so our entry would have then been here as opposed to the blue cyan line, saving right around, let's say 10 ticks. So about 1/3 of our trade's risk had been taken off if you had waited for that confirmation. Now, of course, this is one of those hindsight is 2020 things. And so I say this a little bit more cautiously because we do have our trade plan set in place. And we've seen this happen plenty of times where if you waited for the confirmation, you just missed a trade altogether. So that's a trade-off that you need to sort of balance for yourself, right? Do you mind getting stopped out if that means that you are a bit more aggressive, but you also have some aggressive winners, which you otherwise wouldn't have? Or are you a little bit more patient and you would like to wait for this confirmation and buy on the way back up, essentially giving you a little bit more confidence in the trade, but sure, you also miss more opportunities. But for us, crude was a stop out since we took our trade plan trade. However, we did make up for some of those losses with our stock volatility box. So now if we take a look on the left-hand side, here are all the tickers that we had. And so really we had SFIX, we had LK, we had AYX. We're skipping VIAB since that's essentially stopped trading. And then we also had GIS. So all of these were on our aggressive volatility box. However, the only ones that gave us entries were in this top column right here. So let's go through basically all of them to walk you through what the volatility box looked like for stocks, which is where we were able to make back some of these losses from crude and then profit some. Right? So if we load in our stock volatility box, we'll click apply. And now we'll go to SFIX first. And so what we're looking for is an opportunity to fade. So if we go to SFIX, our first opportunity came to fade as price slammed into our volatility box line right here. Now this was after our 10 a.m. Pacific cutoff. And so once again, this becomes an aggressive trade, right? And so we see that we hit our first area of entry, which is really the beginning of the clouds right here. We went from green to yellow to orange. And really this candle right here is what then gives you the confirmation that it's okay to start looking at shorts at this point or really anywhere above it as a better price. Right, so price then continued to drift up higher before we hit our target, where we had another opportunity to get in, and our stop was outside of the volatility box, and our first target was the same dash target line. And we did hit that target, and to give you an idea of what that move looked like, that was right around a 1.97% move in SFIX, about 55 cents on a $27 stock, which is pretty awesome. And that move happened really, this was our entry point. So that move happened in right around 39, 40 minutes into the close, right? And so that's a nice small winner to get out of the way with SFIX. SFIX also has some decent liquidity in its options since it's traded fairly often. And so if you weren't looking to trade naked stock, then SFIX was a really nice example of a place where you had a beautiful trade set up. Another one is in LK, right? And so now if we load up LK, very similar. So we had an opportunity to get long as price fell into our volatility box. Really, after this point is where we're looking for a potential entry. And we went from orange, 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 and then randomly had a green candle right here, giving you the confirmation that it was okay to continue to look at longs. And so really our entry came anywhere between the entry point and that next subsequent orange candle. You may have gotten a slightly better price depending on any other indicators that you might have used, but really this is a matter of a few pennies between 29.10, let's just say 29.15 and $14.29. And so that's really about a 15-cent difference. And the actual move that we got was right back to our entry line, or our target line rather. And if we take a measure of what that looks like, that's 1.93% in right around 26 minutes, right? And then we continue to make a move back down and drift lower into the clouds, once again, giving us the indication that LK may be a potential trending candidate for tomorrow if we start to make a move below 28.69. And finally, we'll take a look at AYX. And AYX is one of those tickers that also hits those of you that are on CML's watch list. Ophir talks about it quite a bit. And I think AYX becomes a really interesting ticker to talk about today because we start to see exactly how precise these models really are, right? And so we had an opportunity to get long AYX as price fell into our volatility box. Right? So really this is the point where we're looking at entries. You could take this entry, it's a valid entry on its own, or if you're looking for a confirmation, then we're waiting for the yellow candle, which really happened almost right away. And so in this case, you had maybe a difference of right around 3 minutes or so from the entry point, but the same exact entry price. Our stop was outside of the volatility box. And once again, our first target is at the target line. Now, if we take a look to see what actually happened, is we ended up drifting sideways for a bit, came really close to stopping ourselves out outside of the clouds. And this is where most people would have sort of lost confidence, but it's important to stick to the trade plan. We don't shift your orders. You've accepted the risk as soon as you've put on the trade. And we're really just looking to see if we hit our target or our stop first. There's no emotions attached with it. It's not, oh, I'm getting close to the stop, let me move this up. Nothing of that sort, right? It's a very clean, precise trade plan. And what actually ended up happening is we had a reversal before we stopped out and then randomly made a really nice burst move up higher to hit our target into the close for AYX. So AYX was also another winner for us. Now the difference with AYX is it did take quite a bit longer. So AYX took close to 4 hours and 42 minutes, so basically the entire duration of the day. But we were able to take out around 2.21% from the stock, so right around a $2.15 move from a $98 stock price, right? And so while we were close to getting stopped out, we actually stayed in the trade and were able to still take out some profits. So while crude didn't really give us the sort of general entry that we're looking at that follows our trade plan, that gives us that very clean inventories report trade that we're used to seeing, AYX, LK, and SFIX did give us some really nice entries that helped us recoup some of those losses and actually then make some money and pull some money rather out of the markets, helping us end the day on a winning note. Thank you all for watching tonight's video. Tomorrow there will be no video. I'll be back on a plane ride, so stay patient. But then after that, we should be back on our normal schedule with the videos coming out at a little bit more regular of a time. And I think we should all be ready to go again for next week's trading activity. All right, hope you all have a wonderful rest of your day, and we'll see you in the next nightly update. Take care, everyone.